Hi guys, and welcome to the channel. In today's video, we're going to be discussing why dividend investing is the absolute best way to achieve long-term wealth while avoiding the anxiety that you may have about investing. But first, we must understand what dividends are. A dividend is a distribution of profits by a corporation to its shareholders. When a corporation earns a profit, it is able to pay a portion of that profit as a dividend to shareholders. They can be paid monthly, quarterly, annually, however the individual security has it set up. Most commonly, they are paid quarterly. Ideally, over time, companies that are doing well will increase their dividends year after year after year. However, this is not the case with all companies, as it is only the case for companies that are doing very well and are continuing to grow. Some good examples of ideal dividend growing companies are McDonald's, Canadian banks, and utilities. Now, not all companies pay dividends. Some companies prefer to reinvest all the profits back into themselves in hopes for an oversized return in the future. An example of this would be Tesla. These companies focus on growth, and the only way to make money from owning these companies as a shareholder would be to liquidate your shares. This is a fine investment strategy, but for our purposes here, it is not the best way to invest. I'd like to illustrate an example of why I do not own companies that don't pay dividends. Let's say there's a market downturn and I own shares of Tesla and McDonald's. Now, every day I'm seeing my shares in both companies continue to go down in value. It is a very upsetting thing to witness your wealth constantly decreasing day after day. Now, I can't sell my shares in Tesla because if I do, I would be at a large loss. So I'm stuck with these things and they don't do me any good. They're purely ornamental at this point. However, I do not need to sell my shares in McDonald's to receive value, as I am still receiving their dividend payments. And this is the beauty of owning dividend-paying companies. Even in horrible market conditions, I am still receiving income that helps me sleep better at night. The quality companies never pause or decrease their payments to you, the shareholder, thus removing any anxiety through rough patches in terrible market conditions, for example, the 2008 financial crisis. Now, I know what you're thinking. In 2008, many companies paused or reduced their dividends. This is true, but not the quality companies that I choose to invest in. This is why I do my due diligence. It is very important. We cannot be investing our hard-earned dollars into any old company that pays a dividend. We need to do research first, look at their financial statements, hear what management has to say, and then we're going to make the best possible decision based on the information that we are provided. We will dive into individual companies in later videos, and I will make some suggestions based on my own holdings so you can see that I put my money where my mouth is. Now, my goal is to one day retire from my job and replace that income with my dividends. In order to achieve this goal, I will need a lot of money invested into quality dividend-paying companies, but not as much money as you would think. When a company pays you dividends, you essentially have two options. The first option is to take the cash payment and deposit it into your bank account. And the second option is to reinvest that payment directly back into the company, buying additional shares. These additional shares create additional income for you through the power of compounding. Compound interest is the most magical and wonderful force in the universe, and if you don't believe me, maybe you should trust the smartest man who ever lived, Albert Einstein. He is quoted as saying, "He who understands it earns it, he who doesn't pays it." Think of your investment as those old Russian dolls in reverse. The more dividends you receive, the larger and larger your income becomes. This is not the only path for increasing your dividend income. The company itself will also aid you by increasing their dividend payments through time. I'm going to give you an oversimplified example. These numbers do not represent the company's actual earnings, but let's just say McDonald's earned $1 million per quarter in the year 2000. But in the year 2001, they made $2 million per quarter. Now, McDonald's has too much money on their hands, so they decide to increase their dividend payment to you from 50 cents a quarter to 60 cents a quarter. This type of situation is more common than you may think. In future videos, we are going to go over some great companies who have been increasing their dividends throughout time. Now, thank you very much for watching and stay tuned for more information on how to invest